Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to kick things off immediately with a quick pop quiz. I'm going to name 5 technical indicators. What I want you to do is chat in and let me know how many of these 5 have you heard of. So here we go. Simple moving average, exponential moving average, MACD, stochastic, RSI. There are your 5. Chat in and let me know how many of these 5. The reason I bring this up is for some traders, they think, hey, you know what, this indicator that I'm using seems to be used by everyone else. And if it's so popular, is it possible it doesn't have as much value as maybe it once did? On that premise, now I'm not saying whether that's a true or false statement, but on that premise, some traders like to look for some indicators that are not maybe as heavily used, not maybe as central to the trading crowd. So we're going to be stepping away from the more popular arenas of the marketplace for just a moment and exploring something known as the Directional Movement Index. It's also known as DMI. How many of you have heard of DMI? Chat that in and let me know. But yeah, we're going to be going for maybe something that might be a little bit less commonly known, a little bit less popular, but exploring the pros and cons of trading, maybe a less heavily traded technical indicator. So this should be a great discussion. Little experiment for some of you. An introduction to maybe an unfamiliar indicator, but before we get into the ins and outs of that approach, let me say hello to everybody who's already chatting in out on YouTube. Great to see so many familiar names. Hello there, Lola, Life in the Fast Lane, Chris B, Scott, Jim, Dragon Rider, Jay Richardson, Art, Jack, everybody else. Thanks for joining us week after week. Definitely appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, we'll enjoy the presentation. Be aware that you're invited to join us in the live discussion. This is a Friday webcast series. We kick things off promptly at 1 o'clock Eastern time. We'd love to have you here in our live stream audience. And as a treat for my live stream audience members, my very good friend Mike Fairborn is going to be hanging out in the chats. He's going to be addressing any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Mike. And Mike and I would also like to issue an invitation to everybody watching. If you have an account with X, you should be following your favorite presenters there. It really is the very best place to connect with your favorite presenters in between these live streams. You can find Mike on X at Mike Fairborn CS. You can find me there at Cameron May CS. And as we go deeper into this, I see, just about everybody said 5 out of 5 on those other indicators. It's not to diminish their potential importance, but just to sort of set the conceptual stage for what we're going to be talking about today. But as we do, of course, let's get into this discussion. We have to consider the risks associated with any approach to investing or trading. Risks are real. So bear this important information in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. All investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right. So, hey, Pat says, what is DMI? Good question there, Pat. I suspected some are not going to be as familiar with this one as others. So let's lay out how we're going to approach today's topic. First of all, we're going to look at our example trades in our paper money platform. That's probably not going to take us very long, but we'll just quickly recap why the trade was taken, make a change to an existing trade, and then we're going to be looking at the markets. I saw John out there said, can we take a look at the markets? It's been kind of a rough start. Yeah, we'll definitely do that through our TVM strategy set, the Trend Value Momentum Strategy Set. Then we're going to get into this discussion of DMI, the Directional Movement Index. We're going to be talking about basically how it's constructed. I'm not going to go deeply into its construction. I'm going to give you a little resource if you want to take a deeper dive into that. But we are going to discuss how it might be used to generate trade signals on a stock chart. And then we're going to run a scan for those signals. And finally, we'll place an example trade. So that's what we're going to be doing today. Let's go right to the thinkorswim desktop platform. We have 3 current positions right now, a couple of which actually have given sell signals. So we're going to be exiting some of these. So Thaya says you need to know ATR before DMI. It is an element of DMI. You're exactly right, Thaya. I'll mention that. I'm not going to. DMI is a pretty layered indicator. Sometimes I will lay out the exact or the precise algorithm for how something's constructed. I'm not going to do that. It would take me too long to type out. but I'll show you a resource that'll give you those sorts of details. Anyway, but AMD is a current position. We took this trade. If I click on the little quantity here, it tells us this was the trade we took about 3 weeks ago, and it's doing well, even in today's market, up about $500. So here's AMD. We took this as a combination trade, an exponential moving average using Heikin-Ashi candles. We saw that our Heikin-Ashis were starting to get into a very bullish phase on a rising 9-period exponential moving average. So we took an entry right here with a stop down below the recent low, $2 below that candle low. So our stop is waiting right down here. But AMD, pardon me, has really continued to rise using that 9-period moving average pretty nicely as a price support. We got down below that during today's volatility, but still holding above our 9-day moving average. You're not going to see that a lot right now. But having seen that downward penetration of that moving average, maybe our trader moves their stop up at this point. So let's take this stop down here. And I was out last week. I just took the day off on Friday. So Ben filled in, always does a fabulous job. Thank you, Ben, for doing that for me. But yeah, time to take some action on this trade. Let's move this stop up to, let's keep it $2 below today's candle. Then the low today is 166.82. I can point at the candle and see that up here under the L for low, 166.82. So let's just grab that order and drag it up to 166.82, or as closely as we can get it. We'll make a slight modification. This is going to be a few pennies off. Really, the few pennies might not make any real difference here. That's close enough. That's up to 166. 160. Oh, we didn't get it quite there. Actually, let's edit that. 166. What did I say? 82? 88? Let's look. Anyway, let's confirm and send. We move this stop up. I need to make sure. Hold on a second. What was that low? 166.82. So we need to be at 164.82. Let me do the tough math on that, subtracting $2. 164.82. There we go. Move that up to 164.80, or as closely as we can get it. There's 164.80. That's close enough. That's where I wanted it. 164.79, where we're going to move that stop. Here's a little reminder here. When using a stop, with a stop order, there's no guarantee that the execution price will be equal to or near the activation price. So if we have an order up here at 164.79 and the price falls, it's not a guarantee that we'll sell for 164.79. If there's a strong move down, we could sell below that, but let's send that order off. And we've moved that up. There's not a commission to do that. We only pay a commission if an order fills. So that's now waiting for us. Next trade is MAR. So with Marriott, we own another 20 shares. This one not doing so well. And as a matter of fact, let's bring up that chart. This was just using traditional candles. So let's switch the chart type from Heikin-Ashi to just normal candles. And let's switch this over to MAR. Finally, let's load up our MAR steady set. That was our last discussion using the Arun oscillator and a 1050 exponential moving average crossover as a confirmation of trend. You can see that 10 and 50 getting awfully close to signaling bearish. But our plan here with the 10 rising above the 50 and a bullish crossover on our Arun oscillator, we took an entry right here with a plan to take our lumps or take our profits when we got a bearish crossover, which we did get 2 days ago. Got a bearish crossover right here. So the class was not in session at that time. The webcast wasn't in session, so we didn't have the opportunity to do this on camera. I don't like to it's not that I don't like doing it, I just don't do it. I don't make adjustments to trades when the camera's not on. So the signal came here. This is a good lesson for why a trader probably ought to be paying attention to their plan, because while I was waiting for the webcast time to approach, Marriott kept selling off. But let's exit per the plan. This is going to be lower at a significantly lower price than otherwise might have. But let's go to our monitor tab. I'm going to right click on Marriott and let's create a closing order to just sell those shares. I'm going to change this to a market order. There is a reminder here with market orders. Prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So just because we're seeing 256.24 on our screen right now, it's not a guarantee that that's the price that we're going to receive, especially if prices are moving around rapidly. But let's sell these 20 shares. There we go. And as I go back through these existing trades, I know that some of you didn't see the discussion that led to the placement of these trades. If you weren't here for that, that's totally fine. We post these webcasts on our YouTube channel. So number one is, if you haven't subscribed to our YouTube channel yet, please do that right now. You can go down in the lower right-hand corner, click on the subscribe button. It only takes a second. It doesn't cost anything. But our channel, Trader Talks Schwab Coaching Webcasts, is where we house those playlists of previous webcasts. So I can just go to the playlists. I can scroll down. About halfway down is this webcast series. I need to go just a little bit further. There's our advanced charting techniques. I'm going to click on View Full Playlists, and you can see these discussions. Oh, Arun wasn't actually the most recent. We actually talked about the Klinger oscillator most recently, but there's our Arun discussion. There's the Heikin-Ashi candles discussion. And speaking of the Klinger oscillator, let's talk about our last trade. Philip just says stop order definitely is not guaranteed. Ask me how I know. I think a few people, maybe if they're new to trading, we're learning that lesson today. Yep. Anyway, back to our example trades. We also have Palo Alto Networks. This was our Klinger oscillator trade. So let's bring up PANW. Let's switch this over to our PANW study set. And our entry here was, we were looking for price to be above our 100 period moving average. We had that. We were looking for a Klinger oscillator crossover. That happened here. So that was just before the webcast. We took it at webcast time. Plan was to sell on a bearish crossover, which we received a few days ago. Right there, there was a signal. Might be time to pull the plug on this. Class was not in session. Webcast was not running at that time. So I had to sit here and watch this happen. Oops. Well, okay. Another lesson to be taken there. If the plan is in place, maybe execute the plan, but had to wait for the camera to go on. Time to get out of this one. So let's go take our lumps on this one. Let's go to the monitor tab, right click on PANW. Let's create a closing order to sell those 25 shares. Let's switch this over to a market order. And just as we already discussed, with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quote displayed at order entry. Maybe we had $175, maybe a little more, maybe a little less. We'll see. No commissions on any of these trades that we are placing today. There can be on some types of trades, but let's send this off. And we are done with existing positions. So now let's go do the fun part. Let's go have a look at the markets. All right, so we're gonna have a look at the S&P 500. Not every trader uses this as their gauge of what's going on with stocks in general, but it's the one that we use here. Let's switch up our drawing set. When we review the markets, we typically use what I call my trend value momentum strategy set. So let's pop over here to the TVM strategy set. And this is a combination of 4 indicators. We have a 50 and a 100 triangular moving average. These are smoothed out moving averages adjusted for lag. We also have the RSI as our value indicator and MACD as our momentum indicator. And some interesting things have developed since we last spoke. Number one is that the 50 continued to race ahead of the 100 that created quite a distance between two moving averages. Now, for those here who use moving average crossover systems of any type, what might a trader begin to think if the faster moving average starts to escape well above the slower moving average? That may be a time when a trader becomes less excited about placing new trades. They might be feeling like, I need to pump the brakes on new entries because this has been running for quite some distance for quite some time. That might be an indication that stocks are getting overbought. Not every time. They can continue to run. That's certainly a possibility. But yeah, when we have a crossover system of a slower and a faster moving average of pretty much any type, and we start to see a great distance between these two, and really this is the widest distance that we have seen all year, just to put that into perspective. Yeah, trader might take new signals with a little bit of caution. So that was happening here. Then our other two indicators started to send those signals. Here are the cautions. Number one, our RSI, our value, went up into the overbought range and started to pull back. Now, that does not always signal that price can't go any higher. We got a similar signal right back here. It's just that it didn't go much higher from there, a little bit higher. Here we got another signal that this market might be in the short term. Somebody says running out of steam. Lola says running out of steam. Yeah, maybe a little bit top heavy in the short term. At the same time, or very similar time, was actually separated by one trading day. Our MACD histogram switched from, it was briefly in the green. You can't even see it. It's such a tiny little green histogram here, but believe me, right there, I can zoom in. You don't have to believe me. There it is, 2 days. So you shouldn't have believed me. Anyway, our green slipped to red. So trend may be too strong. Value, overbought. Momentum, shifting bearish. Yep. That sort of constellation of indications might have signaled to a trader, we're getting a little bit top heavy here, and you can see that we've been pulling back since then. So where might we pull to? I think that's a natural question. What do you think? If this is a near-term top, and maybe, I don't know, maybe this turns into a downward trend, that's definitely a story yet to be told. But where might be the next level of support? Well, this is kind of interesting how our 50 triangular moving average is coinciding right with these previous peaks on the S&P 500. This might already be a technician's view for a potential level of support. And it's just getting a little bit of additional technical evidence there. So I think for some traders, they may be looking at that. We'll see. Is that guaranteed that price will bounce off that level? Is it even a guarantee that we see the S&P 500 get to that level? No. But that might be maybe the next inflection point. We'll follow up in a week and see what happens. But let's just say that our trader here looks at all this volatility that we've seen. We've seen now 5 closes below opens. So rough week for the bulls. Let's say that our trader thinks, well, that near-term support, it's approaching. Let's go ahead and place a new bullish trade today. We're going to be buying a stock, but not using some of the more commonly used technical indicators. I'm not going to be using a simple and exponential moving average. I'm not going to be using MACD, stochastic, or RSI. Instead, we're going to be using something called the Directional Movement Index. So I noticed that a lot of you, when I asked about those first 5 indicators, you said, yes, heard of those. Let's see, a lot of you with the DMI. Art says, yes, I do use DMI. That's interesting. Great. Pat says, what is DMI? Sorry. No, that's great, Pat. Not everybody knows every technical indicator. There are more than 400 technical indicators right here on thinkorswim. I don't expect everybody to know exactly how these are built. My job is to explain how they're built, how they might be used for trading. It's never a sales pitch for a specific approach to trading, but I do want to talk about DMI today. So let's clean up our drawing set here. And as we do, let's actually our study set. Let's go up to studies and just remove all. Actually, let's go to our stock first, and then I'll remove the studies. But I'm going to be using Amazon as an example today. Let's go up to studies, remove all the studies. Yes, I really want to remove those. And let's add the DMI to our chart. So I'm going to go up here to edit studies, type in DMI so that we can quickly narrow that down in our list. It's in alphabetical order. We could have just gone down to the D's and found DMI. But as we add that to our chart and click apply, there's the indicator down below. I'll give us a quick look at this, but then I want to come back to something here. So when I've applied this, you're going to see that there are three lines here. We have a purple line, we have a green line, and we have a red line. All of them are oscillating, going sideways. So it is an oscillator. It's a lower steady. The red line is known as the ADX line. I'll explain basically what it is, but we're not going to be using it in today's example trading. All right? So I'm ultimately going to wind up taking this red line off. It's not to diminish its potential importance to a trader. It's just not going to be part of today's approach. All right, so let's go back up here to our little Edit Studies icon flask. And let's talk about how the DMI is constructed. And I went back and forth with myself today because you know me, if you've been watching my series at all, I really do like to get under the hood of the vehicle and explain how the engine is built, right? But sometimes that's just too much. I have to make a judgment call sometimes and say, nope, I'm calling this one. I'm not going to explain it in that kind of detail. But the nice thing is, with a technical indicator, if you're not familiar with it, here's a little technique that thinkorswim has available to you. Just click on the little question mark right here, and there's a summary. Now you'll see this summary. I'll try to make quick sense of this for you. But before we even dive into that, I just want to explain conceptually what this indicator is attempting to do. This indicator basically recognizes the potential value of just day-to-day price movement. If prices from day to day achieve higher highs, this indicator sees that as valuable. If prices on a chart, if those day-to-day lows go lower, this indicator sees that as potentially valuable. And it's built right into the indicator. So day-to-day highs and lows are really the basis for all of this. So beats life, you got to bounce. All right, we'll have a great weekend. Bruce says, why do they call this on TV DMI? I don't know who's calling it on TV DMI. I don't know. Anyway, Michael says, what's the difference between DMI and ADX? Michael, let's discuss that. It's actually written right into this little summary here. But the Directional Movement Index comprises three plots. Now this expresses it as DI plus, DI minus, and ADX. More commonly, the plus precedes DI. So we would say positive, and then the DI stands for directional indicator. So we have a positive directional indicator, we have a negative directional indicator, and then an average directional index. So the positive directional indicator, which on this chart is shown as our green line, is calculated as an average increase of high price. So we look at each day, and we look to see if the price went up from the previous day, the previous day's high. If it goes up, we see how much higher did we get. If it didn't go up, the value is zero, okay? If the high price decreases, zero is taken. And then, this is divided by the average true range. If you're not familiar with an average true range, it's basically how much did the price move top to bottom over a 24-hour period, including overnight gaps, all right? And then that sum is multiplied by 100. Negative directional indicator, that's our purple line on this chart, not the red one, but the purple one, is calculated similarly using the decrease of low price instead. So instead of looking at from one day's high to the next day's high, did it go up? But we'll look at one day's low to the next day's low. Did the price go down, right? And if it did, we look at the size of that downward move. If there wasn't a downward move, it gets a value of zero. It's divided by the ATR multiplied by 100. Anyway, that's a smoothing element. Anyway, by default, in the calculation of both positive DI and negative DI, the Wilder's average is used to calculate to use as a smoothing element. The Wilder's average doesn't have to be the Wilder's average. If you're a tinkerer, you can go in there and change that. So this indicator was created by J. Wells Wilder, and he uses his own custom average to calculate the change in positive or negative DI over time. However, you're free to use other average types in the input parameters. Then finally, we have this red line. It's known as the ADX line, and the ADX line is calculated as an average of the directional index. The average type is the same as the one that was used to calculate the two DIs. So in other words, Wilder's is the default. If we change it to some other average, we'll use that. It's going to be used to calculate all three. Directional index in turn is equal to the percentage ratio of the absolute value of the difference between DI plus and DI minus to their sum. Made it to the bottom. Can you see why I decided not to write all that out and try to make heads or tails of it for you? Really, what we're doing here, let's just click OK and be done with that part of the discussion. I feel an obligation when we're examining a new indicator to at least touch on how it's built. Now that you know where you can go to find that information, you can explore that on your own. Most people, I would guess, watching these webcasts are not as interested in how the engine is built, but how the car drives, right? Kelly says, so it's the ADD, ATR, and the Wilder's moving average combined as an average in short, that's a pretty good summary. Yeah, but it's three smooth averages of price changes overnight. Okay. Anyway, so whether you followed that logic or not, we're basically looking, well, our highs going higher day to day, and are they going higher quickly? Or are prices going lower day to day? Now, these are lows going lower day to day, and are they going lower more rapidly or in larger jumps than increases in the highs? Those are netted against each other. They're smoothed out over time, and then they're plotted on these three lines. Now, the red line, I'm now going to remove from this discussion. So the ADX, my apologies to the ADX fans in the audience. We're not going to be using that as part of this trading demonstration today. Let's go up here to the little flask icon. I'm going to go to the customize indicator icon. And for our ADX line, I'm not going to show it as a plot. So let's click OK, click apply. That removes it and sort of cleans up the chart. Is anybody horribly offended that I just simplified the chart? Is that okay after doing that sort of heavy lifting in the examination of how this thing is constructed? Are we okay with making it a little bit easier to read? So here is what the trader is commonly looking for when looking for trade signals using DMI. Again, we call the green line either DI plus or positive directional indicator, positive DI. That's our green line. And if we start to see that strengthening or rising, what that means is that day to day, those candle highs are starting to pop out away from the one just before. And if it's been low, we haven't seen very many of those recently. But if this is starting to shift, those daily candle highs are starting to stretch higher and higher and higher. And that might be interpreted as some bullish buying momentum. All right. Now, when we see that crossing over the purple line, this is our negative directional indicator. It's our negative DI or DI minus. What that signals is that the lows had been gapping downward overnight. And they're not doing that so much anymore. Instead, we're starting to see those highs, not overnight, but intraday, we're starting to see those highs getting more substantial than the difference between the lows. And so as that crosses over, that may be a signal to a trader that there's a shift in momentum. at play. And so that can be an entry signal. And we actually got a couple of entry signals here in fairly rapid succession most recently. And that was happening right around here or here. Now, the opposite is taken sometimes by our bearish traders. If we see that the highs have been going higher more strongly, but then they start to weaken against the lows, we get a crossover going the other direction, DI plus slipping down below DI minus, and that can be a bearish signal. So that happened here, which was about here on our chart. All right. Now, I think I just put together a quick set of drawings here to emphasize this. Let's bring up our Amazon DMI set of drawing tools, set of drawings. And you can see, most recently on Amazon, this does not bode well for DMI traders. We just saw our positive DI cross down through our negative DI. That's a bearish signal. And price is reflecting that right now. Most recently, there was a bullish signal here. That one looks like it panned out fairly well. Bearish signal here. That one for our bearish traders looks like it's signaled pretty well, pretty close to that high. But do be aware, this is just like so many other indicators. It's not perfect. So I want to draw our attention to this period right here where the stock got choppy, and we did get signals, bearish, bullish, literally saying like, sell here, buy here, sell here, buy here, not producing much value, probably leading to a little frustration for that trader as we're seeing small gains or small losses. Whipsaws is certainly a possibility with this sort of an indicator. But the objective of the indicator is to just get us on the right side of a potentially large positive move, or in the case of a bearish trade, on the right side of a potentially large bearish move fairly early. So how about, since I'm pointing out this most recent one, right, not most recent one right back here, there's another bullish example, and that looks like that happened about right there. All right. So now we know the construction of the indicator. Now we know the application of the indicator. Yathaya says it doesn't work well in a sideways movement, and really a lot of oscillators break down. I mentioned some of the other ones, stochastic, MACD, RSI. Those also will tend to generate a lot of false signals or whipsaw signals, producing really pretty small gains or small losses if a stock gets choppy. What might a trader do when it gets choppy if our indicators start to falter like that? Well, in that case, maybe we just shift gears and go for plain old support and resistance. Here are the highs, here are the lows, maybe trade low to high, high to low, and then look for a breakout. Beauty at its best said, would this be considered a lagging indicator because the shift occurred after the fact? Beauty at its best, you raised a really, really solid question. Here's my input on the whole thought process, leading versus lagging indicators. In my view, if it's on a chart, it's a lagging indicator because chart indicators are all interpretations, and there may be some exception out there, but I haven't found it. They're all interpretations of something that's already happened, price or volume, a combination of those two factors. I think that it is largely a marketing ploy to claim that one's indicator is a leading indicator. Now, there are some leading indicators, but they tend to come from the world of economics. For example, new home starts is probably an indication that new homes are being built. So if we see a lot of new home starts or a lot of new housing permits being issued, probably a leading indicator that there are new homes that are about to be brought to market. Could be an indication of strength in that corner of the economy. With charts, it's all interpretation of historical data. So yeah, in my view is certainly open to being wrong. That's a possibility. But leading indicators are more of a marketing ploy than anything. It's somebody trying to sell something. Yeah. Okay. Anyway, back to our discussion here. There's a difficulty on a day like today if a trader is looking to trade something like a crossover on DMI, and that is most things negative. And if we're trying to place a bullish trade, maybe we anticipate that there's likely to be a support bounce here soon. Those can be few and far between. So it can be handy to run a scan to find those kinds of stock setups. So let's go run a scan. And for this, I'm actually going to switch up. I'm going to be using study filters, which are not available on thinkorswim paper money. Instead, I'm going to switch over to the live platform. So this is a demonstration live platform account. I'm going to go to the scan tab. We just have a blank scan here. I don't even need these default filters. I'm just going to take those right off. And I'm going to add 2 study filters. Now, the first one is going to look for price performance. A lot of stocks have gotten beaten up. Let's say that our trader is looking for a stock that's still doing well. So we're going to choose price performance. Near high lows is the specific filter. But we're going to say we're looking for stocks within 5% of 252-day highs, 252 trading days in a year. So this is looking for stocks that are within 5% of 1-year highs. But then we're going to put a custom filter together for our DMI crossover. So we're not doing ADX crossover. Let's delete that. ADX crossover is just the default that always pops up because it's alphabetically the first, and the system doesn't know what we're looking for, so it's trying to guess. But I'm going to add a condition here. It's going to be a study or a technical condition, and it's going to be built on DMI. So let's choose DMI, and we want our DI plus crossing above another DMI. This is going to be our DI minus. So if our DI plus is crossing above our DI minus within the last, let's say 5 bars or days on a daily chart, that's what we're looking for. So let's save that as our filter. DI plus crossing above DI minus within 5 bars. We're going to click OK. And now we're just looking for those 2 things. But I'm going to specifically route this to, let's just scan in the S&P 500 companies. Maybe our trader isn't interested in lower priced or lower market capitalization stock. Let's just look in the S&P 500 and let's run a quick scan. And it looks like within the S&P, there's only, this out of 500 companies, there are only 10 with a DI plus crossing above DI minus within the last 5 days, last week. How about we, my mouse is near Kroger. How about we go to Kroger? There's Kroger. Bob says, can you share that as a script? So Bob, rather than doing that, my apologies. I demonstrated how it might be built. Maybe see if you can see if somebody's interested, they can build it, but using again the live platforms, not available on paper. In any case, here's Kroger. Kroger's had a pretty good year. Unlike so many stocks, though, look how it's doing today. And you can see right down below, in this case, our blue line is our DI plus. It's our positive directional indicator. Crossing above DI minus. There's our signal. So that's going to be our trade for the day. Let's buy some Kroger. So going back to our paper money account, go to the trade tab. Type in KR. This is a $71 stock. We typically spend about $5,000 on a trade here. So let's take 5,000, divide that by 71. That'll get us about 70 shares. So we're going to click on the ask price. Buy 70 shares of Kroger at the market price. Obviously, we're just saying we're willing to spend $71.12, $71.13, $71.20, whatever it takes to get in. Let's click confirm and send. To buy those 70 shares at the market price. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. No commission on this trade. Let's send it off. To go. Bought 70 shares of Kroger. So on our chart, let's do a couple of quick things. Go to Kroger. Here was the reason for our entry. Let's just put a circle around that. Let's make a note that, or just circle or put an oval around the fact that we entered here. And let's save this as a study set. Save our study set. This is our Kroger DMI crossover study set. Guys, we have accomplished what we set out to do today. From here, we're just going to wait to see. It's possible this one could chop right back down, give an opposite signal, and sell on a bearish crossover. Matter of fact, I'll just throw a text note on here. Sell on bearish crossover. Oh, ooh, I need to edit the properties of that. Let's make that green. Let's make that a 24. Let's put our alignment on the, let's see, is that going to be on the left? I guess it is. Okay. Nope. Need to do that alignment on the right. There we go. So yeah, we will plan to sell on a bearish crossover, but yeah, we've accomplished what we set out to do today. I wanted to get away from the technical crowds for a moment, maybe go to a less popular indicator, acquaint ourselves with the Directional Movement Index. We talked about how it's built, how it might be used to generate buy and sell signals on a chart, and we even ran a scan for stocks giving a recent signal. So we're going to see if this signal happens to work out. Time will tell. We'll revisit this in a future webcast, but I hope you enjoyed that discussion, everybody. Thanks for giving me your time today. Hope you have a great rest of your Friday, but as you go, just remember you have some additional resources outside of these live stream webcasts. For the first recommendation that I would have for you for these resources, number one, make sure you're subscribed to our Trader Talks channel. You can subscribe by going down in the lower right-hand corner right now. Click on that subscribe button. It literally only takes a second. It doesn't cost anything. But our Trader Talks YouTube channel is where we house our concluded webcasts. We put those in the playlist right here. So you just go to YouTube, look for Trader Talks Schwab Coaching Webcasts. You can find our playlist right here. You can join our live streams right there. Or if you have an interest in something specific, like maybe you missed our discussion of the Arun oscillator, just do a keyword search and you'll find those previous webcasts that way. All right. Also, make sure that you're following Mike and me on X. You can find Mike on X at Mike Fairborn CS. You can find me on X at Cameron May CS. There's my handle. But this is the best place to connect with me in between the live streams. It's where I post things that might be a little bit more time sensitive. Can't wait around till the webcast kicks off. So like today, initiated a little discussion of Microsoft and Meta. Earlier that we started a discussion of the big moves down that we've seen on the S&P 500. And I even posted a little video about a tool on thinkorswim that can help a trader gauge how much a move on the S&P 500 might impact their portfolio with a pretty good degree of precision. So that's a nifty little feature I just wanted to highlight. A little 2-minute video there. But yeah, this is best place to connect with your favorite presenters there. And if you reply to one of my posts, I try to reply right back to you. So everybody, time for me to let you go. Thanks to everybody that's already clicked the thumbs up. That's always appreciated. 150 people watching, 58 people have already clicked the like button. That's like applause to your presenter. It also gives the presenter's webcast a boost in the YouTube algorithm, helps more people find discussions and explore new things like the Directional Movement Index. So thanks for doing that. If you enjoy a webcast, click the thumbs up. Definitely appreciate it. Everybody go have a great Friday. Enjoy your weekend. I will see you next Monday. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.